Hi, this is Kevin Schweer from Central Farm Service. I am a grain marketing advisor and grain merchandiser. On today's agenda, August 20th, 2020, we are going to be looking at corn and soybean fundamentals. Thanks for joining. This slide is just a quick disclaimer statement. Thanks to MLH Futures and CHS for providing some of the information. Now that you've read this, we'll move on. This is the yield information from the WASDE report from August 12th. Minnesota is projected at a record 197 bushel corn yield. This is the only state of the top 5 corn producing states that a new record yield is expected. Notice that Minnesota is expected to be up 24 bushels from last year, but we're also going to see significant improvements in the rest of the Corn Belt. Illinois leading at 26 bushels per acre, higher than last year, and Indiana 19, and the Dakotas 23 to 24. Interesting to see how well the Eastern Corn Belt is projected, with kind of a poor start. Really hot and dry in June, but timely rain since then. On Monday, August 17th, crop condition report. Minnesota's good to excellent rating was at 83%. That dropped 2%, and that's likely due to drier conditions in the western part of the state. Notice how Iowa's conditions were dropped 10% due to the storm, and we also seen some lower numbers in Nebraska and Illinois as well. Speaking of the storm, this is satellite imagery from August 17th, and as you can see, there's kind of a lighter shade of green, and that's the damaged areas in Iowa. And the expected wind speeds that went through some of these areas were 70 to 85 miles an hour, upwards of 100 to 112 miles per hour, in that Cedar Rapids area. The Iowa State Ag Secretary said there's roughly 10 million acres impacted by the storm. The USDA had said about 37.7 million acres, assuming about a 50-50 corn to soybean split in Iowa. If we're talking a 40 bushel loss in these areas, then we're looking at a 200 million bushel loss, although many analysts are expecting those numbers to be significantly higher, but we really won't know until January crop report. In addition to the damage to the crop, there's expected to be about 57 million bushels of commercial grain storage that was destroyed, and about the same amount of on-farm storage. So we're looking at between 110 million bushels worth of grain storage that was lost in this storm. The other news that was out last week was the FSA numbers that were put out, and the FSA only showed 81.122 million corn acres that were certified. Additional certifications are always processed between August and January, but the largest additional certification between August and the final was 3.6 million. The average is 1.5 million added between August and the final. Let's say the FSA certifies 4 million more acres between now and that final. That's being generous, but COVID could have messed up the FSA filing and reporting. That would put FSA at 85 million acres, and that would correlate with a final WASDE acreage of 88 million, give or take a couple million acres. The WASDE had published a 92 million acre figure on the WASDE report from last week, so we could potentially be looking at a reduction in corn acres going forward. For every 1 million acres that is lost, we'd be looking at about 181 million bushel decrease to the ending stocks. Here's the WASDE report from last week. Of course, this data does not reflect any of the lost bushels from the recent storms in Iowa, so this is more than likely going to be the highest yield and production numbers that the USDA will publish all year. A couple things to note: total supply on hand, they're publishing 17.5 billion bushels. Of course, that's going to be too high, but even if they're 300 to 400 million bushels too high, that would still put us at about a 17.1 billion bushel supply on hand, which would be a record amount of corn for the start of the marketing year. Other numbers to note: the feed residual 5.925 billion, up 325 million from last year, up 500 million from 2 years ago. Ethanol 5.2 billion bushels. That's a little bit higher than what the current pace is. We'll get to that in a little bit. Exports at 2.25 billion bushels. Right now we're about on record pace for export sales, so that they actually may be raising that in future reports. One other thing to note, though, is that you in the last 2 years, the USDA has overstated the final new crop corn demand on this August report. Last year, they overstated by 750 million bushels, and 2 years ago, they overstated demand by 495 million bushels. So we know supply is probably going to be going lower from here, but demand could also take a step back as well. Moving over to the demand side on corn, here's just a chart of where the USDA has pegged the feed and residual use over time. And as you can see that it's a very tight fit to the trend line, which pretty much means whenever we have a big carry out, the USDA just kind of moves that feed and residual number higher. They have a tough time forecasting how much corn livestock's actually going to use, and if they're off on their crop size, then they can kind of adjust things in this account. And I think part of their reasoning is that when corn is $7, every kernel is treated like a gold nugget, and when corn is $2.75, there's just not as much carefulness used when handling the grain. Here's a chart on ethanol profitability. As you can see, currently the ethanol plants are making right around 10 cents a bushel, and this is an average plant across the Midwest. In southern Minnesota, some of the better plants, or the more newer efficient plants, are probably making more like 20 to 25 cents a bushel. Of course, during the peak there in March and April timeframe, these plants were losing as much as 90 cents a bushel if they were grinding. Some of the plants, now that ethanol is profitable again, are trying to get going, such as Cargill and Fairmont, and Valero at Lakota may as well start their thinking sometime in late September or early October. Ethanol production last week was 918,000 barrels per day. That's equivalent to 38,556,000 gallons. Last year at this time, ethanol producers had produced 1,066,000 barrels per day. If we stayed at this level from the start of the marketing year on September 1st through next August, that would consume 4.85 billion bushels worth of corn. And if you remember from the WASDE report we looked at a few slides ago, their current projection for next year's ethanol corn demand is 5.2 billion. So we're currently off that pace by about 350 million bushels. Ethanol stocks seem to have stabilized. Ethanol stocks last week were at 19.75 million barrels. That's down significantly from record levels that we've seen last year, but we're still above levels from 2015. Moving into the bright spot of the corn market, the U.S. corn exports. One thing that's been helping them is the U.S. dollar getting quite a bit cheaper in the last couple months. You can see that we're currently trading in the 92 to 93 area versus just a few months ago in April and May we were trading at almost a 1.4 being the peak. Going forward, if the federal government continues to print money, the dollar should continue to get weaker, just as long as other countries don't print as much as we do. Staying with the US dollar, here's a long-term picture of where the dollar is at that 92 to 93 level. There is still significant downside risk. After the financial crisis in 2009 through 2011, the dollar was trading between 75 to 85. And the Fed recently said they want to achieve a 2% inflation rate, and they're willing to do what it takes to get there, which likely means printing of more money. If this would happen, a weaker dollar should help us compete better with South America, who of course they buy their inputs in reals or pesos, and they sell their commodities in US dollars. Here's a look at global corn prices. The US Gulf is that line that's in red, Argentina is in blue, Ukraine green, and Brazil is the yellow. And as you can see, The U.S. currently has the cheapest corn on the planet all the way through at least December. So going forward, it sure looks like we should be getting the lion's share of the export business until the next South American crop arrives in February. No surprise that since we have the cheapest corn in the world, our export sales have been outstanding so far this year. New crop corn sales are ahead of the last 7 years, and you have to go back to the 90s to find a better start to the marketing year. We have 465 million bushels of sales on the book so far, compared to 157 million at this time last year. The Chinese have had 12 corn auctions since May 12th, selling 1.7 billion bushels of state reserves. And 100% of the corn that's been offered at that sale, those auctions have been sold. The most recent auction was on August 13th, and that corn was sold for $7.16 a bushel. Not quite a record for the year. About a month ago, they had a 23 cents higher sale that was printed on July 30th. It would appear, though, that exports have plenty of room to run as China refills its state stockpiles, and they at least try to make an attempt to meet the Phase 1 obligations. Switching gears to corn bases, CFS train destinations this summer include the Pacific Northwest, California, Idaho, Iowa, Arizona, Mexico, Chicago, Illinois, and loading one next week to Kansas. On the spread side of things, the September-December spread at 14 cents indicates that there is old crop moving. It's keeping a lot of the old crop on the sidelines at the same time as guys with December futures on look to move those back. Most are not doing that, with the 14-cent spread being a little bit too expensive. The amount of new crop corn sold is pretty insignificant to most years. We're hearing that on average maybe 25 to 50% of their normal sales are on the books. That could keep the spreads a little bit wider than what we'd like. So currently we're targeting 14 cents to March, or about 30 cents out to next July. And of course we have a big bean program on the export side of things that'll be in place through at least December, and then following that the corn export program should really start kicking in from December through at least February, and that'll likely keep our corn basis fairly strong. Here's what the world stocks to use ratio is, and these figures do not include China stocks, but world stocks to use right around 14%. Not bullish or bearish. We just have we have ample supplies on hand. If you would include the China stocks into this number, it would be around 26%, although the numbers from China are not reliable. On this next part, we'll be switching gears over to the bean market. Here's the 2020 soybean yield. This is from the WSDA report from last week. USDA put the average yield at 53.3, up considerably from the 47.4 from last year, and also well above the trend, which is right around 49 bushels per acre. Here's just a quick look of the soybean yields by the state. As you can see, Minnesota is expected to be up about 7 bushels per acre over last year to 51 bushels an acre. Some big yields being expected in the eastern corn belt, with Illinois at 64, Indiana 61, and Ohio 58, and those are expected to be up almost 10 bushels an acre over last year. This is the drought monitor, which was released on August 13th. As you can see, there's still severe drought in part of western Iowa, moderate drought in other parts, and eastern Iowa is abnormally dry, and also abnormally dry in northeast Indiana and most of Ohio. So that has many inside the trade wondering if these are going to be the highest yields that we see published all year from the USDA. Although I would caution that especially the eastern corn belt has been seeing timely weekly rains, and we definitely seen that on the last chart with the eastern corn belt looking at near record yields. Here's the balance sheet from the August WSDA report. Stocks usage ratio is projected at 13.7%. A new record yield of 53.3 is projected, and that would be beating out the 2016-17 record yield. And like on the corn supplies, beans are also expected to be record of over 5 billion bushels on hand at the start of this marketing year, which may cause some logistical issues and not enough space. This record supply is expected to be met with record demand. near record crush and near record export sales, similar to that of the 2017 and 18 marketing year. And that, of course, would have been before the trade war and before ASF decimated the Chinese hog herd. This huge export program is expected to take place right now through the end of December, and that South American northern Brazil starts harvesting their soybeans as early as January. That's when they'll start taking over the program to China. Here's a look at US and Brazil soybean prices. United States Gulf is in the red, and we obviously have the cheapest soybeans in the world right now by almost $25 a ton. And that should stay that way through at least December. Once we get out to January, that's when we could start seeing the South American offers get cheaper than the United States. New crop soybean sales are near record. We are currently at 660 million bushels sold as of last Thursday, about on par with record of the year 2017. Last year at this time, we only had 130 million bushels sold. We need to continue to see some big export sales announcements, as the USDA is projecting exports to come in within 50 million bushels of that record from 16 and 17 crop year. Big question going forward is whether China has enough demand to meet this goal, and if they will follow through with their commitments. They are still in the process of rebuilding their hog herd after it was decimated by the ASF. So it'll be a race to export as much soybeans as possible before South America takes over. Whatever is left on the books come January will be subject to cancellation. Here's a quick look at world stocks to usage without China stocks included in this figure. Currently at 19.3%, expect to be down slightly from last year. Overall though, there is plenty of soybeans on hand in the world. Looking at soybean basis, with these strong export sales to China, the river is bidding extremely aggressively right now. You can sell about 12 under into Savage. And Mankato being at 30 under is just trying to keep a reasonable freight spread, and that should continue at least through this export program. The Illinois River is still closed down. They're working on fixing and maintaining the locks and dams, and that's expected to be closed in through at least the first half of October. And that'll likely put some more pressure on the Minnesota and Iowa river terminals. And we're also seeing some opportunities to rail some beans down to St. Louis. And those beans, of course, will be loaded onto barges sent down the river for export. With the record crop on the way in Minnesota, look to set basis for fall delivery. Hedge funds were short 172,000 contracts of corn as of last Tuesday. We'll see an update of where they're at here on Friday. Of course, 172,000 contracts is a significant short position, but it's nowhere near a record. With the Iowa damage and the FSA numbers being less than expected, I think the hedge funds got a little bit spooked last week, and they started buying some of that short position in. Question is, how much are they can continue to buy in? Are they going to want to get about neutral, or will they even want to go long corn? In past years, we've seen them flip from being 200,000 contracts short to 200,000 contracts long, and that's what's really driven prices higher than they would have probably gotten fundamentally. Not much on the soybeans. They're only long 26,000 contracts. So we're probably not going to see explosive buying from the funds unless they decide they want to go long 150,000 contracts, which is about a record from what we've seen in the past. So putting all this together, our current recommendations for old crop corn and beans are just to sell your remaining bushels at the market. For new crop corn, with the carryout currently projected at 2.7 billion bushels, unknown damage in Iowa maybe 400 million bushels, we're still going to be looking somewhere north of a 2 billion bushel carryout, similar to the last several marketing years. So like the last several marketing years, 350 cash has been a pretty good level, so that's where we want to target. So start with a futures contract into the third month and lock the basis in later. I would suggest starting right around 375 to 380 on the July. If you can find a 25 to 30 under basis to a train terminal, feed mill, or ethanol plant this summer, you should almost be able at that 350 cash level. For the next crop, you're out in D21, target 393, but consider selling some of the something near the current market and selling a $4 December 21 call option to add premium. That would get you to a 391 with a potential double up at that $4 strike price. Note that there could be potential upside from what we talked about earlier with potential inflation from the weak US dollar. On new crop beans, we like selling some October, November cash beans at the market. There's really no carry in the bean market right now, so there's no reason to store them. Target 928 for your next sale after that. If we can break through 928, there's not as much resistance, and we could potentially see a run towards 975 to 980. November 21 beans, consider starting near 927. Sell a $10 call if we continue to see some further strength, which would add about 25 to 30 cents to your prior contract. In summary, we like selling beans right now and getting those to market this fall, and we like using your bins and taking advantage of that carry to get yourself around 350 cash later in the marketing year. Thanks for watching. If you have any additional questions or you want to learn more about CFS marketing tools, please visit our website at www.cfscoop.com or stop into one of our locations and someone will be happy to help. Thanks.